Welcome to our midweek Forex forecast. As always, we need to remind you trading Forex is a risky endeavor and not suitable for all investors. My name is Jay Norris. I've written a couple of books on trading which were published by McGraw-Hill, and I'm also the Director of Education at Trading University, where I spend a considerable amount of time teaching the art of discretionary trading in live markets. And there's our website if you'd like to find out more about us. First market we're covering is going to be the Australian US dollar. Australian US dollar, it has a nice stance to it, no doubt about it. You see these three important patterns are up, the primary, the secondary, the day-to-day. On the other hand, it's been a few days, been several days since you've punched out a higher high here. Unlike the euro, you have not seen the Aussie take out the summer highs just yet. Not sure if we're seeing a pause here or not. We do, however, see a strong U.S. stock market, a strong euro, in fact, a strong dollar yen, by the way, also as being supportive of this market. We see central banker policies around the globe geared all towards quantitative easing as being bullish for a continuation of these patterns in place. This market being a good example of those patterns. We were most recently reminded of the Bank of Japan's plans for quantitative easing with their new PM, Abe, in place. We see that as a continuation of the Fed's policies, which of course have been dollar bearish. We would see it as being yen bearish also, as far as stimulating the economy with the QE methods. So we see all this as basically a continuation for the patterns in place, and this is a big pattern in place right here in the Aussie dollar. So overall, we like buying dips in this market. And if I was a gambling man, I'd say, yeah, I think you take out these summer highs in the next couple sessions or so. We'll have to see, though. Nothing is etched in stone. There can always be something happen somewhere in the big wide world where you can shift that short-term pattern, and that in turn can perhaps even try to shift to intermediate-term patterns. But for now, as I said, if I were a gambling man, I'd be looking for higher highs to take out that summer high pretty quickly. Next market, Euro US dollar. Euro US dollar had no trouble taking out the late summer high, that late September high. You're looking at an 8-month high settlement, very strong market. We think they essentially kicked open the door to 135 by eclipsing that September high. So higher highs here. And again, we see central banker policies around the globe favoring not necessarily a strong euro, but being supportive of the euro. And it's more or less a weaker dollar is really what it comes down to. Currencies are a relative game. It's not necessarily a strong euro you're seeing, but the rug getting pulled out from underneath the dollar and the yen. So not necessarily overtly bullish news out of euro land, but you don't have a lot of bad news either. So we see a 135 as being achievable, and there's an outside chance that you even go higher than that. Well, I think 135 should cap it. And we see room actually even between now and potentially year end to go after those levels also. Next market, the pound dollar. Pound dollar very strong. Another big up day. There's a guy going after those late summer highs, the September highs. And this is a bullish market overall. Look at that. The primary's up, secondary up, day to day up. You don't want to be short a market when you have those three very important patterns higher. Let's look at the weekly here too. And we've been saying for some time now, we think 170 is in the cards here. We think you'll see that 09 high. So stay tuned for pound. Looking good. Let's cover that dollar yen now. There it is. You're pumping out another high settlement for this market. I think that goes back to beyond the spring. So look at that. That's a new yearly high and high settlement. You put in a new yearly high yesterday. You put in the new yearly high settlement today. So you have to go back pretty far. You're looking all the way back to April of 2011. So easily that's a 1.5 year high settlement today in dollar yen. And we see this as proof that the Japanese are finally buying into the global recovery, if not buying into, more or less really being kind of dragged into it dragged into and thrown into the fight, they don't have many choices where they can get any kind of return. So it's kind of, they don't have a whole lot of choices here. They're going to have to come out of Japan, though, and they're going to have to start investing that money overseas. And, I see what's happening in Japan very similar to what happened in Switzerland with United Bank of Switzerland charging for people in Swiss deposits, literally forcing companies and individuals to move their money out of Swiss francs and start to invest it elsewhere. So that really is the trend in the world right now. We see that in the U.S. too, and it's already in place in Switzerland, and very realistic possibility you're going to see that in Japan also. Last market we're going to take a look at is the dollar, is the U.S. stock market. There it is. Boy, you could see that same pattern here, where that all-important primary is up, that secondary is up, and the day-to-day is up now also. U.S. stock market made a 2-month high settlement, and again, we see central banker policies around the globe of being supportive of this market. So we see a continuation in the upside for the U.S. stock market. We see that as being supportive of the other currencies, and in fact, supportive of dollar yen also. So we think you'll continue to see what you've been seeing really since October, as far as the markets all coalescing and moving higher together, with dollar yen being included along with the asset class rally here, as far as stocks being strong, Aussie being strong. So dollar yen's kind of in the club now. We look forward to seeing you next time. If you want to know more about what we're doing at Trading University, come and see our site, where you can have access to pretty much everything we do. That's a 6-month program, yet you get access to everything up front: core concepts, advanced concepts, graduate, and master's course and master's course archives. It's a per monthly charge, but you get access to everything that first month. So if we're not what you expect, you're certainly not going to continue with us. Hey, thank you so much, and we'll see you for the weekend update.